Hey, good day, everybody. This is Dennis Wilborn, the Active Trend Trader. Thank you for joining me today for our recorded session of How to Make Money Trading Stocks Weekly. We do this live webinar every Friday, and I want to thank you for, taking the time to watch the recording of it. If you join us live, that's awesome. If you want to find out how to join us live, just go to our YouTube channel, follow us there, and that way you'll get an update whenever we are doing a live video, which of course is every Friday. We want you to be on top of what's going on in the market, whether it's crashing down or just rocketing to the upside. Until later, God bless. Thanks for joining us. Aloha. Hi everyone, this is Dennis. Encourage you to stick around to the end of today's video. At the end, we'll show you how to become a premium member and save 20% off the regular price. Thanks, mahalo. Here we go. Okay, hey, good afternoon, everybody. This is Dennis Wilborn, the Active Trend Traders. I want to welcome you to How to Make Money Trading Stocks. This is our weekly edition of this. We've having a really crazy time in the market this week. We'll get this recorded. We'll get this up and presentation up and operational. I just want to take a look at a few things today. And so I'm going to basically stop my video and let's go on to the presentation. Again, this is Dennis Wilborn with the Active Trend Traders. I am the Active Trend Trader. And this is How to Make Money Trading Stocks weekly. A weekly update. I want to remind everybody that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not a guarantee or a promise of future performance. I'll just do a real quick admin check. Can you hear me on the webinar? And if you have any questions, okay, excellent. If you have any questions or whatever, just use the chat table to provide that information. Hey, I saw this beautiful post today. You know, what do we want from the market? We want basically everything to add up. Of course, everything to add up. But we want 1 + 1 + 1 + 1 to eventually equal 7. Well, guess what? That's what we want. However, here's what the market usually delivers. You go, it delivers a 1 + a 2 + a 4 minus a 3 minus a 2 plus 0 plus 5. It's been that kind of a week this week. One of the biggest challenges that people have in learning how to trade the market is one of the biggest challenges that they have in learning to trade the market is that the market doesn't give you a paycheck like a regular job. Sometimes the market, gives you $100. Sometimes it's $1,000. Sometimes it's $20. Sometimes it's a negative $20. So it's not like a job. Sometimes it can actually take money away from you. So learning how to trade is an absolute fantastic opportunity to learn this. But if you have traded in the market for some time, you will know what this means. Here's what the market actually delivers. And so oftentimes getting past the psychology of this is often a challenge. However, anybody can in fact get her done in learning how to do that. So what are we going to do today? One, a timely actionable intel review at the end of each week seeking to clarify, simplify market decisions so wealth can be multiplied. We follow the 5 pillars of active trend traders. We identify what to trade, when and where to enter, when and where to exit, what strategy we're going to use, and then what to expect. So what's the market condition currently? Fed good? I don't know. You tell me. China tariffs bad? I don't know. You tell me. What both of these events have led to is one thing in particular, a sloppy, choppy, and potentially toppy market that may in fact be setting up for a more significant pullback than we had expected in the past. With that said, what can we do right now to protect ourselves or just to get ready for what's going to come next? Well, one of the things to protect ourselves is hopefully you're trading a strategy and trading a system that will basically get you out of the market when the market is doing what it's currently doing. It's remember, cash is a position, and there's nothing wrong to be in cash. The one thing we want to avoid doing moving forward, we want to avoid trying to get into the market until we get the proper signals to get back in. And the proper signals next time, guess what? Maybe a trigger to let us trade the market to the downside. And there's a couple of ways to do that. Here's we're sitting as of about 9 o'clock this morning. We're going to take a look at a couple of charts. Since the beginning of the year, I've been on a physical fitness aspect where I've been trying to get myself back in shape. And believe me, once you hit a certain level of maturity, in other words, when you start getting old, sometimes it's really challenging to get yourself back in shape. But I do this as a discipline because the discipline I show when I go down here, the street behind us is Makakilo Drive. It goes down for about a mile from where I'm standing right here, and we call it the Beast, because typically we run down it, but then bingo, bango, trying to run back out is a tough one. But it has helped me get myself back in better shape so I can get better rates on my life insurance and that kind of stuff. And so as you can see, I'm hammering myself into good shape because I want to beat the beast. And oftentimes the beast, when you're trading, lives within each one of us. And so we need to have a method by which we can beat the beast. And I believe active trend trading provides that opportunity for many people as they want to get involved in trading. So let's take a look at a couple of these charts we were talking about. Let's see, because we don't spend a lot of time here on this particular session. But let's take a look at the spiders. What are the spiders telling us? I've got a weekly chart and a daily chart. Weekly on the left, daily on the right. As you can see, what has happened? I want to add one thing to this daily chart really quick. Hold on just a second. I want to add in I want to edit this. I want to add in the 50-day moving average. There we go. Because with the devastation or with the carnage that we're seeing over, is it really carnage? I don't know. It's basically we're just moving into a more significant correction. But as you can see, what has happened here on the spiders, we basically, in the S&P, it has basically dropped the 50. Normally, if we get a close below the 50, which it looks like we're going to do, we're getting the 8 and 20 to cross down. So I'm going to explain how do we want to trade this going forward. But I'm going to go ahead and move over to the NASDAQ and the Russell for doing this because they're showing similar traits, as you can see. On the weekly chart, we have you can't categorize it fully as a bearish engulfing, but that's the biggest week down that we've had all the way since going back to the initial part back in October 2018. So what that's telling us is that basically the market could be basically setting itself up for additional downside drop. Again, the cues. We had been watching this 191.32 level for a potential area of bounce. It failed there on Wednesday, and then it continued. Now we've failed below the 50-day moving average. The 8 and the 20 look like they're getting close to crossing. And I'll show you what that looks like. Let's blow this up just a taste. Roll it over here so you can see a good idea of what's on. The 8-day is the moving average on the top. The little purple one there is the one on the bottom. And as you can see, they have both rolled over started to point down. And what oftentimes happen is I call this, they are now moved into the catching mode. They're always in catching mode, but what it's going to catch is stop any advances up to the upside and then provide a line of demarcation or a point of demarcation where we can anticipate wanting to get short this particular market. So that's what we're waiting for now. Is price action going to do a quick rebound? I'm not going to buy this first one because it'll be a new lower low. What I'm anticipating is the market doing something along this line. Pulling down. At some point, figuring out, and it may be here about 185, then bouncing back up into the 50 or these other moving averages that'll be down to about here next week, back up to 190-ish, and that may give us the opportunity to say, okay, that's where I want to take a bearish trade. Now, am I going to want to take a bearish trade in TQQ, or I can, I can buy a put, I can sell call credit spreads on that, or I can look to trade the inverse ETF on this, which is the SQQ, which is up $1.74 today. As we see, it has started to move up. And again, so what we would look for on SQQ, which is the inverse, is a pullback back into the moving averages and then a rebound from there. And as you can see, it's got this 3-time leverage ETF. It's got some really good upside. This is the low from, or this is the high, excuse me, from back in the first part of June when the market sold off. So pay attention to that. And our other buddy is IWM. As you can see, IWM has now, get back in shape, okay, has crossed over the 820 is about to cross. The 50 is now, it had gone kind of flatline. We knew that the IWM, the Russell, had been underperforming the rest of the market, and sure enough, it continues to do so. So let's, so I'll let you kind of figure out and say, okay, if you've been watching this, we have now put in a lower low. Take out that low right there. So the indexes are now primed to move back down to the downside. And so I'm going to set myself up to start looking for downside trades on the indexes. Now, in either the indexes themselves or the leveraged inverse ETFs. So, okay, let's take a look at a couple of other things and see how this is also playing out in the area of oil. USO, we may want to keep our eye on USO because a lot of times when the market starts to fall over, sometimes we will, basically investors will try to go to something that's a little bit supposedly more stable investment. I don't know if you call oil a stable investment or not, but we're getting an interesting candlestick today, which is kind of a bullish harami right in the middle of it. Oil, but however, we had dropped the, below the moving averages. We pop back up above the moving averages. Oil may start to rally. The other ones we're looking at is GDX, which is the gold miners. You can also look at GLD. What tends to happen when the market's moving down? Well, our buddy gold tends to move up, and you have a couple of opportunities for how to trade this. The gold miners is what we're trading with the active trend trading team, but you can also look to trade gold. I mean, look at that's kind of interesting. It came back and kind of, not a pretty pattern, certainly showing the volatility that is going forth. Let me flip this as a weekly. Let me pop over a chart that shows a monthly on this to show you that there we go, there's the monthly. GLD, with this breakout, still has a long way to go to get back up to these past highs. About a $44 move. So just keep that in mind. I'm not going to say buy it here because it needs to get another breakout about this 137 level, but clearly the support it's finding at 131.15 is something you want to look at for gold. It's also a good time, since this is the first couple of days of the new year, or correction, of the new month. Take a look at your monthly charts. Are you seeing any longer term patterns start to shape up there? So back to, and then I'm going to leave you with 3 stocks just to keep your eye on. This is not a recommendation to buy or anything like that, but just, you know, look at them and see how they are doing. Take a look at the monthly, the weekly, the daily over the weekend. And what first, Amazon. Amazon, big move down. The 8 has now dropped below the 50. So I'm looking at, what do I want to do? I'm going to look to trade Amazon to the downside, but on a rebound back into the moving averages. As you can see last year, what happened when, let me slide this over here. Last time we went into a little bit of a downturn on Amazon. Let me see. Right here, we started dropping. We got a cross in the 820 right there. And then any rebound back up towards the 50, towards the 820, actually resulted in an excellent opportunity to get short on Amazon and or do an option trade that would take advantage of Amazon to the downside. What the other one I want to take a look at, similar type projection, because now we've got that first cross down. The other one I want to take a look at is Google. And which, you know, we can call, I think we call it Alphabet now. Some of us call it Big Brother. Now, Google's looking more positive than the other indexes, but it had gotten back up into a level of past resistance and rolled over. It has not blown through the moving averages yet, so keep your eye on what's going on there. And then Netflix is the last one I wanted to take a look at for today. As you can see, Netflix. This is a perfect example of what, you know, this crossover type thing. Let me get that out of here. Yeah, remove that. As you can see, blew past, everything crossed back to the downside, got slightly back above the 8-day moving average, and then rolled over. And as you can see, we put in about almost a $20 drop since it rolled over there. But that's kind of the patterns that a falling stock tends to make. And so be aware of that. Try to pick things up as they get back up into the moving averages. We'll see if it fails here, but it's looking like, look over here on the weekly chart, we're getting a drop, kind of a little horizontal flag. We drop out below the bottom of that about 103 level. Well, then it's got a 103, let's say $85.99, $86, 103, correction, 303. That would be about an $80 drop. So you can anticipate an $80 drop target if it fails at 303. Keep that in mind. Somebody asked, hey, Ray, why don't we take a look at cyber? I will do that. I don't normally do that, Ray, but since you're such an absolute fantastic guy, I'm going to do that for you. Again, apply the same type of characteristics. The 820 have not crossed. However, cyber is continuing to sell off. The big thing, I would not do anything with cyber per se because of that little indicator right there, which says earnings on cyber come up on. They come upon you. There we go. Right there. Coming up on the 7th, which is sometime next week before the market opens. Remember, that's before the market opens. If you're planning a earnings trade on cyber and you're already in it, make sure you close it out on prior to the close on the 6th. So, yeah, I'm not seeing anything other than I will be doing an earnings trade on cyber the day of earnings or the day before earnings to take advantage of that. But as it looks right now, we're getting a little bit overextended to the downside. If, and after earnings are over, if we're down here below the 50, I will again take a look at that down to the downside. Things that close below 50, they're going to either basically continue to fall past 50, or they do a reversal right here. Here's a good example of a reversal back to the upside. So, okay, I have covered like way more than I normally cover, guys. Again, yeah, Steve, do you have a mic? I want you to say hi to the folks. Yeah, Steve Farrar is one of our local absolute fantastic traders here in Hawaii. He basically helps with and organize the IBD Honolulu meetup group, and I love the way he trades and what he does, and he's getting ready to retire from his regular job and trade for a living, I hope. And so I don't know if, like I said, I don't know if you have a mic or not, but again, I'm going to invite him to kind of be a participant on. Here, I'm going to unmute you on my side. Steve, you want to say hi to everybody?
Hello. Can you hear me? Can you hear me at this time? Hello, hello.
Hey, Steve, how you doing? I'm sorry I didn't have my earphone on my ear.
Okay. Anyway, hi to everybody, and we'll be participating, and we'll see what happens.
Yeah,
Interesting time in the market right now.
Yeah. Hey, Steve, is there any one stock that you're watching right now?
I like OLED, OLED.
Well, yeah, sure. Let's take a real quick look at that. So, guys, if I think Steve's going to be a great addition to it, because one, he brings a little bit more Hawaiian flavor, just what you needed. and again, I've known Steve for, gosh, we've known each other for almost 5+ years.
That's correct, yeah.
And so again, Steve follows both the IBD, the Wilborn method of trading the 8-day moving average, but you also are a follower of
Wyckoff,
right? So,
right, yeah. That's correct.
So you've got just absolutely fantastic, solid background. So again, we'll be looking forward to plugging you in, when you can make it to our meetings, or to our webinars, I should say.
Absolutely, and I like OLED because I think it's in a strong uptrend. It had a great earnings report, but a negative response.
Yeah,
mainly to a downgrade by one of the firms. But not right now. But it's something I'm very excited to look for a potential long entry. But also with the caveat that if the market rolls over, that's all off the table.
Yeah, without a doubt. Well, that's what's interesting about this is it is looking a little bit stronger than the rest of the market, which is banging down here below its 50.
Right.
This morning it hit its 50, made a really heck of a nice rebound.
That's correct.
But if the market rolls over and dies and pukes, well, guess what? 70%
Everything will go with it.
That's right. 70% of all the stocks tend to do the same thing. So, hey, thanks, Steve. I'm going to put you
Very
back
welcome.
Finish up today. Anyway, I'm really excited to have Steve working with me over here, or working with us over here in Hawaii. And what am I looking for, guys? Let's go here. So let's just real quick. We're still working on our strategic compounding. This has been the kind of week I've had. I lost $29 in in my compounding account this week, but what the heck? My objective on the strategic compounding is 5% per week. Those who have been following this know what's going on here, and I'm glad we're basically using options to basically achieve this with a small account amount. We started the year with $10,000 in this strategy, and as you can see, we're up to about 28,000, over 28,000. My target for the week, $1,400. Our other thing is we do earning trades. Earning trades so far. It's been a totally different kind of earning season than last season because you can see last season had a lot of green in it, and we did over $4,000 during the earnings season. This season, it's been a little bit more slender. We're down about $862. This week, we basically just about broke even because we had the PayPal come in that we put on last week, and so that's what we're looking at. Active trend traders, as you're aware, every week for the premium members, I send out our new trading plan for the week. We basically, this is not the one I'm looking for, and I'm really upset. Hopefully it'll be on the next page. It's not, and so that's okay. Well, what I do basically is I'll just show you this. Is I send out these updates on the weekend. It gives you your trade table for specifically exactly what what I'm going to be trading. So if you want a parallel trade, you can do that. So let's see here, and then also webinar special. Right now, 20% off if you join Active Trend Traders and do it for a quarterly basis. So you'll save about $74 and almost $75, or $24 or $25 a month is what you save. But it's a quarterly amount, $29.99. You can go here to this place, activetrendtrading.com/membership. I'll spend very little time. We're in the August time frame. As you can see, Russell tends to get a bid in August, but then falls back down in October and gets ready for the end of the year run. The thing that I'm really interested right now is in natural gas. We're in August. Middle of August, we'll see if we start catching a bid on the seasonality of nat gas. Nat gas has just been terrible as a trade over the last year or so, as we've sold off. So, hey, big things coming up. Monthly meetings, August. Tomorrow, I will be doing a clear and simple trading rules for the monthly Bay Area Moneymakers webinar. As Steve mentioned, August 6th, we'll be doing a presentation for the monthly Honolulu IBD meetup group. Once I know where that's at, we'll basically post where it's going. And then, hey, if you can drop me an email there, or join us on, find our Facebook page and just follow us on Facebook, follow us on YouTube, or follow me on Twitter. So premium training this week, 6:30 on Wednesday for premium members. There's a little bit about us. There's my teammate Brandon, who's been working with me now with Active Trend Trading. So until next time, I just want to say, keep growing the egg. Be patient, and with this market the way it's working, and trade wisely, trade profitably. We'll see the premium members on the final hour here shortly at the top of the hour. And so until next week, aloha, trade well and prosper. Have a great weekend. Mahalo and God bless everybody. And Steve, yeah, what number do you want me to call you on, Steve? On your mobile or the mobile that you had provided me earlier? Okay, call you back shortly because I got to get ready for the other webinar also. So aloha, everybody.